start. Okay.
I blamed it on my poor eyesight. So.
You'd have to catch the light just right. Looks like we've got 12 online, 13. So thank you for joining us and those in the room. I'm going to kick it over actually right away to Lynn to get started with production.
All right. Thanks, Katie. And thanks, everyone, for those in the room in attendance, as well as those that logged on. It's the month of March, and so we're talking about January production right after the beginning of the year. Oil production actually declined from December to January. We're not terribly surprised by that. It was about a 4% decline in production. Part of that's actually maybe a bit larger than what we anticipated. So January full month production, 1,147,000 barrels per day. That's a bit larger than what we anticipated. If you think back a couple of months, you'll remember that we had a day of 90-mile-an-hour winds in the oil patch. And so electric power was lost over significant portions of the oil and gas fields. And that took about 10 days to fully restore that power. So we averaged in the neighborhood of 50,000 barrels a day of lost production during that 10-day period. If you spread that over the month, that's 16,000 barrels a day. So we would have been more in the neighborhood of 1,160,000 or closer to that 1.2 million a day if it had not been for that event. Those are unusually high winds even for North Dakota. And so that was a tough situation, and a lot of the rural electric cooperatives had significant damage to their infrastructure and took some time to repair. So oil production came in at about 96% of the revenue forecast. The revenue forecast, current revenue forecast, started in the month of January with 1.2 million barrels a day, and we were just 4% below that. Price-wise, though, a much different story. And so today's price is 50% above revenue forecast. The revenue forecast right now, currently, until IHS does an update for the legislature, as well as Moody's does an update for all of us, and that'll be coming soon within the next couple of weeks. There'll be a new revenue forecast. January oil price was about 10% above forecast, $40 a barrel. Today's price is about 50% above. And so we'll talk a little more about that as we get to the topics and as we discuss OPEC and what happened with the OPEC folks late last week. Natural gas production also dropped, but by a much smaller percentage. It only dropped by about 1.4%. And so again, we're seeing that difference between oil and gas performance. The Bakken continues to get more and more gassy as time goes on, and that again is something we had anticipated. Rig count today is 15. It was 12 in January, so it's improved significantly from there. It was 15 in February, 15 today. The January revenue forecast that I keep referring back to is built around 15 drilling rigs and 13 Tier 1 DUC wells being completed every month as we go through this biennium. So we've got the drilling rigs, unless we saw a collapse in rig count, which is not anticipated with the predicted oil prices. We've got enough new wells being drilled and enough Tier 1 DUC wells to fulfill the production forecast in the revenue forecast. Completions so came in 59 in January, 44 in December, only 32 in February, and we'll talk about the cold temperatures in February next month when we talk. But it was wind in January, but it was just a very short-term event. It just had long-lasting effects. When we look at producing wells, You can see that we're actually down a little bit from December to January, from the all-time high, which was a year ago at 16,280. We're down 482, something like that, in terms of active producing wells. 375 of those would be the orphan wells that we plugged, and 107 would be wells that remain shut in. So we're down to the kind of the last stages of shut-in wells from the pandemic and the price collapse that we saw in May. We're down to the last remaining stages of those wells being shut in. We had a meeting with a midstream company yesterday. One of their primary clients shut in quite a few of those wells, and they actually have 3 workover rigs running right now, putting those wells back on production. So we're down to the last vestiges or the last stages of that shut-in incident that happened. When we look at Fort Berthold activity, very, very similar to what we saw statewide. Let's talk about OPEC a little bit. The street and the NYMEX futures folks, all of the experts basically expected OPEC to add 1.5 million barrels a day when they met last week on March 4th. That is not what they did. Saudi Arabia argued for continuing their voluntary 1 million barrel a day cut, and instead of restoring 500,000 barrels a day officially, or from their involuntary cuts, they only restored 150,000 a day. So the OPEC add was 10% of what was expected, significantly below what was expected. And so you saw what happened to oil prices. They rose quite rapidly, and you can even see that already at the gas pump. Now, interestingly enough, the folks that are tracking the tankers leaving Saudi ports say that they're not cutting 1 million a day. That in January, they only cut about 300,000 barrels a day. Now, they could always be cutting more. I'm sorry, in February, the oil tankers leaving Saudi ports only showed reduced exports of 300,000 barrels a day. Now, they could always increase or decrease exports this month to compensate and average 1 million barrels a day, but it would take some very, very significant cuts. So it was voluntary, and so they're trying to manage oil prices. They have increased their price projection. They were trying to keep prices between 45 and 55. They're now targeting between 50 and 60, and they're well above that right now. So we'll see what happens there. But the street expected a much larger production add than what occurred. When you look at storage around the world, it continues to drop, but in the United States, took a big increase last week and this week. And that's all because the Texas refineries went down. They went down February 17th, and they're just getting back to business. So when you shut a massive refinery complex down like that, it takes a significant period of time to bring it back on. So the increase in U.S. storage is really all related to the Texas situation that happened the middle of February. A date to note coming up, April 9th. That is when the hearing on DAPL will happen in front of Judge Boasberg. And so we'll all be watching. That's just about a month out. And that's going to be a very, very significant event in terms of oil production and oil prices for the state of North Dakota. A couple other things to mention. If you didn't believe natural gas could be volatile, you should believe it now. The value of natural gas at Watford City went to over $20 an MCF on February 17th when Henry Hub skyrocketed as a result of the situation in Texas. It has since fallen back to $2.23. So that's a tenfold rise and fall in just a very short matter of time. And so that points to how electric generation and volatile hydrocarbons and those sort of things are all so closely related. And so I've been counseling, I counseled the legislature, and I've been talking to everyone who would listen about the fact that we really need a deep dive into our electrical grids and how they're interconnected, and what happens if one of the sources has a massive failure, or if one of the sources has a failure and the backup source for that also is problematic. North Dakota is complex in that our electrical grid is powered by both MISO and WAPA. And so you can't just look at one or the other, you have to look at both. And so one would not have thought that problems in Oklahoma and Kansas would end up being problematic for Western North Dakota, but they did, because Southwest Power Pool connects to WAPA, which connects to a lot of our rural electrics, and their procedure book resulted in gas plants and oil wells in Western North Dakota being shut off as a result of a power shortage all the way down, not into Texas, because Texas has its own separate grid, but all the way down into Oklahoma. So it's all very interconnected, and we really do need a deep dive into all of that. Gas capture is working well. We held in at 94% capture. And just one last item to talk about, the Bureau of Land Management. We've talked now ever since the inauguration and the executive order freezing the leasing activity. New information out yesterday that the study, so there was basically a long-term freeze put on federal leasing, federal public lands. Nobody knows how long it's going to be, but we now know that the study of those leases and that leasing practices will kick off March 25th in Washington, D.C. With a public forum and then public comment periods following that. So there will be, that'll commence an online comment period, and then the results of that forum on March 25th are not even going to be summarized until early summer. So we're starting to see a picture, and that is that this is going to drag into early summer, and that's as far out as we can see. So we have tried to make projections of the potential impact of that on the state of North Dakota. We think at this point, during the upcoming biennium, it probably means just a reduction of 150 new wells through the upcoming biennium. It accelerates rapidly from there if it is to become long-term. So that's my comments, Katie, and we'll take questions.
Thank you. While we are on BLM, I will ask one question that just came in related to it. Do you think that the Biden federal lands leasing pause will be less of a problem than initially feared, or with a plan in place now, or is there any kind of reaction, I guess, to that?
Yeah, so I guess I would go with the first answer, less of a problem than initially feared, from the standpoint that it was retracted and from applying on tribal and allotted lands, anything that's managed in trust by the Department of Interior for Native American or Indian lands. And since that is dominantly the best geology in North Dakota, that really mitigated the impact on the state of North Dakota. Also, there isn't actually a ban on permitting, but there's a significant slowdown in that no one in the district or local offices can issue permits. They all have to go to Washington, D.C., but it is still possible to get a permit. So it's not as impactful as the initial letter would have implied, since it doesn't apply to trust lands, and since there isn't an absolute moratorium on permitting, there's just a significant slowdown on permitting. So that's why we estimated only 150 well which is still a huge impact, but only 150 well impact over the next 2 years, with it expanding rapidly if it goes beyond that.
On that topic, do you anticipate that North Dakota will offer comments to the BLM either during the public hearing process or?
Yeah, so the question was, do I expect North Dakota to offer comments both on March 25th and in the public comment period following that? I don't think we'll be offering comments at that forum because our March Industrial Commission meeting doesn't happen until 5 days after that. So I haven't been cleared by the policy people to comment at that public forum, but I am going to recommend to the Industrial Commission members, and I'm highly confident that we'll be offering comments following that. So after that public comment period opens, I really anticipate we'll be commenting. So we'll be listening, but I don't think we'll be offering comments at that public forum.
Sure. Will your comments probably consist of how this would impact North Dakota if it were to stay permanent? I don't know if it would go further than that.
I think our comments would be along those lines in terms of we're already evaluating using spatial queries about whose lands could be impacted and how they might be impacted. So we're going to talk about the increasing cumulative effect of it long term. At least I've already started to think about the comments, but I think we really are going to focus on what we call split estate in North Dakota. And so we'll talk about that for just a second. Most of the federal public lands in North Dakota are split estate, where a tract as small as 10 acres of federal lands can prevent the drilling or the development of 500 or 600 acres of private or state land, just by blocking the ability to lease and permit on those lands. And so we've already identified a tract over by Trenton, North Dakota, which was nominated for lease at the March sale, which now will not be leased because the March sale was postponed because of this moratorium. It contains a 10-acre tract of federal lands that are unleased. That's going to stop 3 or 4 wells from being drilled, and those 3 or 4 wells would not only develop that 10 acres of federal minerals, but it would develop some 580 acres north and south of there that belong to private individuals. So we're going to emphasize that North Dakota has a unique situation because of so much checkerboard and split estate federal land, that they're actually subjecting themselves to litigation from private mineral owners and from the state by blocking the leasing of those small tracts and preventing the drilling of those state and private minerals. Yeah, so we have a very unique and interesting story to tell, along with the cumulative effects. The financial economic effects in North Dakota are significant, much less so than, say, New Mexico or Utah or Colorado, but we have this other situation where the economic effects roll over into private property.
Got a couple questions that have come in online related to the DAPL hearing on the 9th. Is there any preparation, whether it be from the state or operators, in advance of that April 9th date that might be taking place?
I had some discussions yesterday with some midstream companies, and yeah, there are conversations going on about reactivating rail transportation, about the possibility of one company has even put together the numbers on how many trucks have to go through Bismarck to replace that segment of pipeline. So the preferred trucking route is right down I-94 from someplace just west to Linton, and so yeah, there are lots of operations or plans being put together. None of them, I don't think, are, being super seriously looked at, but all the alternatives are being investigated.
On that note, could oil potentially be trucked from the Bakken down to Linton, put in the pipeline there, and then carried to Illinois?
Yes, it could. Yes.
Yes.
One other question that came in online was how soon a decision may be made after that April 9th hearing, if it's that immediate or if there's some time afterwards.
I really don't have an answer for that. Judge Boasberg has been known for making quick decisions, so I would expect it to be pretty quick after that hearing. I don't expect it to be weeks or months later. So.
I have a question about gas capture. You've gotten all those. Okay.
Yeah.
I would like to expand a little bit on that conversation with the legislature. Have you proposed any specific studies, and what are the nature of those conversations? Where are they at?
With regards to gas capture?
Correct.
Yes. So the question was conversations with the legislature about gas capture and about the study that needs to take place in terms of, for example, how we generate our electricity. Yes. So there are several pieces of legislation moving that we've been discussing as places where they can set policy along those lines. There is a policy piece, Senate Bill 2065, which deals with setting up the permitting processes and the legal processes for putting together storage for natural gas, propane, natural gas liquids, hydrogen, all the above. And so that's a moving piece of legislation that we just had some conversations this morning. That type of thing would be super beneficial in a situation like what happened in Texas, where you could have a large amount of natural gas in storage that could then meet the heating needs, and you could actually, shift to electric generation to replace wind or whatever happened. And so that's an important policy piece. We had conversations yesterday about House Bill 1452, which sets up the Clean Sustainable Energy Authority. And I anticipate that bill is going to get amended to also revise or revamp what has been known as Empower, and to focus all the different pieces and parts of that to make sure that everything the Clean Sustainable Energy Authority does and everything that Empower does includes some study of reliability, so that those things are taken into account. I do know that our transmission authority is looking at WAPA and MISO and how our electricity is generated and where it goes and where it comes from and what the impacts of someplace 1,000 miles away might be on our grid. And then another piece of what is taking place in our budget, Senate Bill 2014, is some funding for studies of natural gas storage to enhance our ability to get petrochemicals into the state, a petrochemical industry, as well as enhance the economics of ethane to electric power. So yeah, lots of conversations, lots of different, that's at least 3 different pieces of legislation, one of which puts money, puts our money where our mouth is, and the other 2 that deal with the policies of making sure that we can permit and construct the necessary storage to make these things happen and to create the reliability that we all need, so that the next time this happens, which could be 100 years from now, or could be less, the next time this happens, we actually are able to reliably flip the switch and turn the lights on. So.
I have a question about oil prices. You know, they've been over $60 per barrel WTI for at least if not 2 or 3, and they've definitely been higher than that this past week. If these oil prices were to hold for at least a while into the future, how set in stone are like producers' drilling plans? Could they potentially up whatever they're planning for this year and drill more here?
Yeah, so I just had a conversation about that this morning. The question was, if oil prices remain at these kind of levels, could we see our operators change their drilling plans and, you know, really get significantly more active this year? The answer I got from them was not this year. Basically, their capital budgets are pretty set, and they will be looking at those again in October, which sounds like it's a long ways off, but it's not. And so they, first of all, the market doesn't think that these are the long-term oil prices. So if you look at EIA, or even if you look at NYMEX, they all see this as a short-term peak, and that the oil prices dwindle off to more like the upper 50s by, you know, within the next year or two. But the industry is saying that any additional capital that they get, they plan to use for completing DUC wells or returning wells to production. We still got, like I said, 100 wells that are shut in as a result. And so nobody is making plans to increase drilling budgets this year at based on this oil price. They are looking at accelerating returning wells to production and accelerating DUC well completions.
Any additional questions? All right.
Thanks for your time and questions.
All right, well, good afternoon, everyone. Justin Krinkstead, Director of the North Dakota Pipeline Authority. We'll get right into the transportation update. We do now have kind of a complete look at 2020 from the Williston Basin. We now have data coming in from eastern Montana, South Dakota. So all in within the system, right around 1.23 million barrels per day at year end 2020. And you can see, obviously, that change from January to December on the downward trend. We are expecting that to level off and potentially change here as we head into 2021. You just heard on the slide 3 from Lynn. Again, we'll pick up those other states here in about a month to see how things are going in the region. And then again, for those of you that like the visual of how things have been changing and how it compares to historic changes, again, really kind of what Lynn and I had expected heading into this winter time, that we would see that peak coming out of the summertime, coming out of the shut-in period where we were seeing some growth month to month, and now this downturn period where we're seeing month to month drops in oil production. I can't remember if Lynn touched on it, but February is going to be another tough month, I believe, so we'll likely see production slide again in February. March so far has been pretty friendly to the industry, but we've got road restrictions and other things starting to work into the basin, so a little too early to tell right now. On the transportation side, on slide 5, taking a peek, there was a slight change in what was taking place between pipe and rail from December to January, and a little counterintuitive to what I thought would have occurred. And so if we take a peek at slide 6, we saw a slight decrease in the utilization of pipelines and an increase in the amount of crude by rail leaving, even though we saw a decrease in total North Dakota volumes. My estimates are that we saw about a 10 to 20,000 barrel a day increase in the amount of crude by rail traffic. And so, the Brent WTI spread, you can see it there, was still less than $5 in the month of January. So again, it may just be a one-off anomaly, but we'll see what that trend looks like. February is going to be an interesting month. Again, once we get a hold of the data and start looking at how things shook out, obviously with what was taking place in Texas, with estimates for somewhere around 3 to 4 million barrels per day lost between Texas, Oklahoma, and other production in the southern U.S. And so we're, a state like North Dakota that was able to continue to produce, and our connectivity either to Cushing or to the Gulf Coast with Dakota Access, again putting that exclamation point on the importance of connected infrastructure. And will we see some shifting in February as barrels needed to move and get to places where production was lost, or is it moving in a different direction because refineries were down? It'll be interesting. So we'll stay tuned, and hopefully in the next couple months we'll start to have a little bit more intel on how things looked. Slide 7, again, this was that comment I just made. Again, that increase in rail movement out of the region. We'll see if that trend continues. I don't suspect it changing again, because the Brent WTI spread today is still in that $2 to $3 range. So it makes the rail economics tough when compared to what's happening at Clearbrook. Clearbrook pricing right now is right now above WTI pricing, a little over $1 premium for Bakken crude and Clearbrook. Dakota Access, the pricing down in the Gulf for Bakken crude is strong right now as well, so it makes it tough for the rail economics. For those barrels in December, this is the latest month we have. No major changes there. We're still seeing about 2/3 of the barrels going to the Pacific Northwest, and roughly the other third going to the East Coast refineries. Pricing in December, very consistent. No major anomalies here, where we were still seeing pads 1 and pad 5, East and West Coast, highest priced markets, then followed up by the Gulf Coast. And then where we see things today, again, that Brent WTI spread, $3.62. Again, the threshold usually that I'm looking for is somewhere in that $5 to $6 range. Once those coastal prices on the East and West Coast are $5 to $6 above that Cushing price, that's when we typically see a more significant shift off of the pipelines and onto the rail network. Slide 11, again, just an update. We did see some more traffic coming through in the month of January, coming down from Canada. Again, this does pick up rail volume. So as Canadian production was starting to pick up, they have relied on crude by rail as well out of Alberta for a portion of their production. So we do see some of that traffic come through North Dakota. On the flaring side, again, same pie chart from December to January, and that's a very positive thing. Again, at 6% flaring, 2% from wells that were unconnected, and 4% from wells that did have a pipeline connection, but it just didn't have the ability to move every one of those molecules to the marketplace. So that's certainly always been a challenge. If we look on slide 13, but it has been improving, that orange piece, right? So how much natural gas is being flared from wells that are connected to a gathering system. And so as compressor stations are able to get added, wintertime generally gets more challenging because of natural gas liquids settling out in the natural gas gathering system. So they have to have very aggressive pigging schedules to clear those liquids, get those cleared out so they can maximize the gathering system. But all in, things are very positive. On slide 14, again, the number of new wells getting connected exceeded new wells producing gas, all positive signs as we come into the first part of 2021 here. Lynn alluded this earlier on slide 15, what the EIA, what they're forecasting for their oil price outlook. And again, most major price forecasters that I've seen, are in that same camp of we're in a bit of a don't want to call it a bubble, but a bit of a high point right now. Some easing as OPEC when they meet in April or whatever strategies they're going to do. Most folks believe that we'll see some price weakening as we head into the summer months. On the natural gas side, again, we're sitting in a very good position for gas processing for the near term. In the next, I would say, again, somewhere in that 2 to 4 year range, we will have to look at what facilities would need to be expanded, what size expansion that would look like, what the timing, the scope, and so all these things are still in flux right now. Again, long-term, my natural gas production expectations are still very robust, and so we do still have a need for significant investment here in North Dakota for everywhere from the wellhead all the way to major transmission systems out of the region are going to need expansion work here in the coming years. Just a quick look at Northern Border. Again, this was, Lynn had talked about the pricing on Northern Border. So Northern Border is our major connection point from the Bakken to the mid-continent markets. And so when the gas markets in February were strained, the pulls and the demand for gas were extreme at levels that were likely record-breaking for most pipelines. One interesting thing in the Williston Basin that it doesn't get a lot of attention, but if you look at this map right down near the North Dakota, South Dakota, Montana border where that interconnects, we have a natural gas storage field that's operated by WBI Energy. That is North America's largest natural gas storage field by volume. And so what happens during these extreme weather events, and typically it's always happening in the winter. When this happens, it accelerates even further, but during the warm months, the summer months, they will inject natural gas into that storage field. And come winter time, when the demand increases, they'll be pulling natural gas out of that system and then shipping it down to those southern states. And so when Texas production was compromised by freeze-offs and power outages, again, that connectivity between producing areas like North Dakota, it was critical. All those pipes were full. As much gas as could be sent from North Dakota down to those southern states was certainly occurring. So again, just to kind of connect the dots of North Dakota's role in what was taking place, not only from an electricity side to the oil and the gas side as well. Just a quick update as well on what's taking place in Northern Border. Still not heard or seen any type of filings at FERC or anything similar to what took place in 2020. But we are seeing more and more from a market share. North Dakota's gas getting back on Northern Border. Now right around that 80% of that system's flow is back coming from North Dakota. And again, in recent weeks, still exceeding that level that Northern Border had proposed last year of 1,100 being that maximum BTU that they were asking FERC to approve. Again, for those of you that weren't following that last year, the FERC did not approve that tariff change, but did leave that door open if Northern Border wants to come back here in 2021 for some type of refiling or reattempt at that tariff change. So with that, I'll stop here and be glad to answer any questions.
Any questions, Justin?
I don't really have anything for you. I'm just thinking about oil trucks driving through Bismarck. I can't get that image out of my head.
Yeah.
All right. Well, we don't have anything online either, so you're home free today.
Okay. Excellent. Well, thank you, everyone.
Justin.